Welcome traders, and welcome back to this week's Mastering the Markets with me, Matt. As you guys all already know, I'm a senior analyst at PrimeXBT, and I'm super excited to be here with you guys for this week's live tutorial session. I'm going to be going over a couple of things that I think are quite important ahead of Trump's inauguration on Monday, and specifically deep diving into some market developments happening in the cryptocurrency market. So let's dive into a couple of things that I think are going to be quite useful for all of us today. We obviously have core CPI as well as inflation data results coming out later this afternoon. Now we know that the inflation data results have been quite a sort of instrumental data point on both the financial markets from a global perspective as well as a cryptocurrency perspective. So I'm kind of anticipating a bit of sort of volatility to pick up this afternoon. I definitely think that if we have a potential miss on those data points, we could also see a bit more sort of heightened volatility throughout the rest of the trading session, as well as into the back end of the day. Now, I'm actually on the PrimeXBT main portal over here, and I just thought to quickly show you that if you have not actually, ever navigated to our economic calendar or used our economic calendar before, you can simply click on where it says Tools at the top, pretty much left-hand corner. And there you can find our economic calendar, which you can pretty much scroll through and find all these data points that are relevant to you as a trader. Now, obviously, depending on where you sit and what sort of markets you trade, you can also filter through the different countries. So for example, if you're only interested in, say, the United States, or you're interested in, say, Europe, you can go and filter through which specific data points you're looking for, and then you can obviously keep track of that over here. So you can see today, the 15th of January, we've got at 3:30, which is basically UTC time, that we've got core CPI as well as CPI inflation data results coming out. Now, the forecast for these data results is actually for the core CPI data results to come in alignment with what was happening previously. So 0.3% for core CPI month on month. Now, I've also seen, like pretty much in the past, that this core CPI data point is actually a bit more of, say, a true metric that's happening, with regards to current inflation. And we've also seen the Fed announce in the previous sort of FOMC meeting minutes that they're going to kind of be sort of looking at this data point a little bit more closely going forward, especially considering, with Trump coming in now, there is obviously a lot of talk that he's going to be implementing a lot of policies around tariffs and imposing these tariffs on different countries. Last week, Monday, he already announced that he's potentially looking into imposing tariffs on all countries. So he's already starting to change his tune a bit. The markets are obviously trying to unpack, where they think price might trade to and trade from. So I think CPI as well as inflation is going to be one of those data points that potentially does start to increase, during Trump's sort of, term when he comes in next week, Monday. And that's mainly because of all the pro-business sort of policies and sort of things he's looking to implement. So I definitely think for the US economy, we saw last week Friday the NFP data results came in at a staggering 256,000 jobs added in for the month versus the forecasted rate of 164,000. So everyone is kind of expecting the US economy to have slowed down over that December period, but the complete opposite has actually happened. It seems to have actually picked up a lot more, and we are actually seeing a lot more sort of growth and strength in the US economy, which I think caught a lot of traders and analysts off guard on Friday afternoon. So, this also kind of suggests that this may also impact, say, these interest rates as well as these inflation data results going forward. And if we do start to see inflation potentially increasing, what does that look like for the Fed? Is the Fed going to potentially put a pause on interest rate hikes or cuts or whatever it may be? So I think it's going to be quite an important data point today. From a year-on-year inflation data result, we've got core CPI coming out at 0.3%, but then the year-on-year figures actually forecasted to increase to 2.9%. So from the previous month of around 2.7%. So that's a slight increase of around 0.02%, which means we are edging ever so, far away from that target that the Fed had. And remember, the Fed had a target of around 2% based on that inflation data result. So we seem to have come down really low. I think we got as low as 2.3, 2.4%. And now, obviously, since Trump has kind of been, elected in as the new president going forward, the markets are kind of pricing in, inflation potentially going back out a bit. And with inflation potentially going back out again, we might see the likes of interest rates, potentially either staying flat in alignment with what they are currently at now, or potentially increasing in alignment with, say, inflation data results coming out too. So let's hop over to the actual charting side of things. I wanted to kind of deep dive into the cryptocurrency side of things a bit more specifically today, ahead of Trump's inauguration. I'm also going to be doing a special Trump inauguration live stream next week, Tuesday. So that will be happening post the actual, bringing of him into office. So I think there's going to be a lot of volatility over the next couple of days, especially running into Monday, especially for the cryptocurrency market in general. So I think it's going to be quite interesting to see how these data results come out today. I also do believe that we do kind of start to see, when inflation comes out month on month, if there are potential any misses or whatever it may be, we do see the cryptocurrency market often trading a lot lower in the sort of first period of the month. So for the first 2 weeks, we see this kind of slow staggering, pullback to maybe some lower prices. And then when inflation comes out around mid-month, which is around now today, the 15th of Jan, we then see, the price action start to pick up again. We start to see the movements, really driving price. And I think we've already seen that over the last week or so. I mean, if I just deep dive a little bit into BTC over here, we pretty much ran into lows of just under 90,000. And this was on the 12th of Jan, 13th of Jan. So pretty much Sunday, Monday morning, we saw price kind of diving into these lows. And that's going to be quite interesting to see if we can potentially hold in these areas of support now and potentially, look to kind of take out these false highs over here. I'd be quite interested to see if we can maybe potentially take out this liquidity over here. And, if we can continue to trade back into, say, new highs at around 108,000 plus. So, from a daily perspective, if we look at this on the weekly time frame, I did mark out last week that I was quite interested to see, if potentially price would maybe drop as low as this 50% retracement on the Fibonacci tool, so around $80,000. Which is fair to say that is not possible. Price could still dip down there. You've got a couple of displacements as well as this demand zone sitting down here that we could easily quite tap into and then pretty much trade higher again thereafter, or continue to trade lower. So I don't want to write off that possibility that potentially price could still fall back below, say, this 90,000 region and into that $80,000 region. But for the time being, you've got this imbalance area that's sitting over here, which we've kind of mitigated. We pretty much tapped into, and we've seen price kind of move out of there quite swiftly. So yes, I wouldn't necessarily say that this would be the most strong imbalance or displacement area on this actual most recent leg. I would look for some sort of discounted price action below this 50% level here, for some real sort of strong confirmations and validity in those areas of interest. So I do think that there is the possibility that price could dip back into 80,000 before we go higher. It doesn't necessarily have to do that. We could just respect this, weekly imbalance area that we're in now, which we've kind of tapped into. And if I actually draw this out for you a little bit more clearer, you can also see here how we pretty much have this internal support area sitting at around 92,000, if you want to call it that, to around the low of, say, 90,500. And we pretty much tapped into this area again. We've tapped into here almost 4 times, and you can see that visually here by these sort of liquidity runs here. And you can also see, by our most recent one here. So I wouldn't be surprised if price trades higher from here, but I don't want to rule off the fact that we could potentially still dip a little bit lower. But for the time being, it does look like price has kind of, when you're in the bull market, or especially where we're trading currently now, pullbacks of around 15 to 20%, those are quite normal, and those get bought up pretty quickly. So if we're taking the high at around 108,000, marking it back down to the low of around 89,000 here, that's almost marking off an 18% drop to the downside. So when we are in these stronger market conditions where price does continue to just be picked up and traded higher, anything bigger than that is possible. Maybe it's not as likely, considering we've already seen almost 20% drop from the highs of 108 from last year to the low on Monday at around 90,000. So we've had this daily 50 EMA also respected quite nicely. Price doesn't really look to be showing signs of being overbought or oversold on the RSI indicator. You could kind of see that happening a bit over here, to the back end of November, where we kind of then topped out at around 108,000. So again, this is I would say this is a very minor internal support area that I would be aware of. I wouldn't necessarily place full reliance on it. I would want to see some sort of bigger retracement where we get that discounted sort of flush out, and we often do see price kind of whipsaw back down to 80,000. We've seen that in the past where we get these 30-40% drops in the bull market too. But that being said, we've also seen, if we have a look here from our previous range, where we pretty much drove into the highs of around 73,000, and then we made a low at around just under 49,000. That was almost a 33% drop that we had. So yes, we could still range in here before we potentially drop lower and then continue trading higher. But at the same time, either scenario is quite valid and possible. For me personally, I would rather wait for some clearer confirmations on the likes of BTC before actually getting back into any trades. I did say this last week that I wanted to see a bit more of a clearer sort of direction, and I think the clearer direction is going to come from a break either above here and some sort of continuation back to the upside, something like that. That for me would be a lot more, I would have a lot more confidence in the setup, rather than trying to trade this internal range where there is no real clear direction right now. Obviously on the higher time frame we are bullish, but not to say that I don't want to write off the possibility that we could potentially drop lower before we trade higher. So CPI today, that's going to be quite an important data point. We've got Trump inauguration happening on Monday. He's already announced that he's got some policies with regards to cryptocurrency and regulation in general that he's ready to roll out as soon as he's in office. So we don't really know what that looks like right now, but I suspect that it could be quite interesting and exciting. So the next couple of weeks are definitely going to tell us if we do trade higher, or if we come and find support lower down before potentially trading higher again. So that's my thoughts currently on BTC. I'd also be quite interested to see how price reacts out of this resistance area that we have marked out here. So right now we have somewhat found support internally here, and now I would be looking to see if we can kind of break through the structure point here and then potentially do something like this. A break above 108 would give me a lot more clearer confirmation that price is looking to hold as support in this 90,000 region, and we potentially then trade higher from there. However, if price kind of goes back into the highs of say around 106 from here, we could just find ourselves bouncing around the support area, as well as this resistance area where we form this range the same way we saw this range happen over here, and then potentially do we see a break above or a break below. So I wouldn't write off the fact that a potential range bound PA on BTC could be on the cards. And then from there, I'd be looking to see how we react to figures around 120. I think 120 is a pretty good one. 120, and then potentially, you know, moving up in increments of 10,000. So 120, 130, 140, 150. That's how I'm kind of looking at this market from a price perspective. I don't want to put any unrealistic price targets, but if we do start to trade above these, you know, internal resistance areas that we have marked out here, I would then be looking to see how we trade from 110 to 120, 120 to 130, 130 to 140, and 140 to 150. That's kind of where I'm going to be taking, or already taking off a little bit of partials around 100, but, you know, extending potential profit target regions into these zones. That's what I'm going to be looking out for. That's pretty much what my sort of plan is at the moment. So yeah, it depends on how long we're going to range now in this area. Maybe we get pretty aggressive with price action off the back of CPI today, and then Trump's inauguration on Monday, and then potentially, you know, we look to, you know, push higher from there. So I think that's going to be quite a key thing to look out on BTC. I wanted to dive into Solana a bit as well. I think Solana has been quite an interesting pair to keep in the back of your pocket in terms of trading from an altcoin side of things. And this is what I was saying, what I wanted to see something similar happening on BTC, which was, you know, pretty much an aggressive move to the upside, which we've seen. And now you can already see we've had, you know, from the low over here at around 110 to this high at around 264. We've seen price come back into this area and rebalance below this 50% level of the Fibonacci tool, which also is in alignment with, you know, previous resistance here at around 190. So, you know, something like this on Solana is really, really eye-catching, to be honest. You've also got this internal, you know, internal sort of ascending trend line that we've respected a couple of times on the way up. You know, we've tapped almost 3-4 times down here, and then, you know, we've seen price kind of push higher, and now we've kind of found ourselves back on this trend line. We've rejected it again over here. This was from Monday's PA. So something like this on Solana is quite interesting. I like the price action on Solana. I think it's a bit more discounted for me personally to be interested in something like this. I would rather now want to look for some potential momentum to kick back to the upside. So what would that potentially look like? So here would be pretty much the sweep of liquidity over here, and then this high at around 223, that would be my confirmation area. So a break above 223 or 223, something looking like that, that would give me a lot more sort of confidence in the actual price action and in the setup holding. I don't want to get stuck down here on the lower time frame. So for example, if you have a look at this area over here, so some might argue that this is my, you know, most recent structure high, which it is. However, this is your internal structure high. This would be my external structure high. So I would like to see price, cool. If price breaks above here, we respect this and we continue to trade higher. That's perfect. That gives me more confidence that when we break this area over here, that we're probably going to hold and push higher from there. So that's what I'll be looking on or looking at on Solana. I don't necessarily want to try get a long entry down here at around 190 and have my stop below this area, say 170, and then, you know, this is just pretty much a run of liquidity over here, and then we just dive back lower. So I would rather wait. I'm happy to see this confirmation building over here. So if we break above that high over there, I'd be happy to see that happening. That kind of aligns with, you know, this break in this resistance area here, and you can kind of see how we've come and retested this now, and we've also rejected out of this 50% level on the Fibonacci tool. We've also then rejected this internal ascending trend line. So those are my couple couple points that I'm interested in. We've now taken this liquidity low over here. So what am I looking for now? I'm looking for a break above. We can retest this, cool. And then I would like to see price trade back above this daily 50 EMA, potentially get back above this 223, and then look for some sort of continuation play back to the upside. So I'll show you how you can potentially enter into some market order positions and limit order positions on our platform with regards to, you know, this bit of information here. But for now, me personally, on something on Solana, I'm going to wait to see if we can break above that 123 or 223 zone. That for me is going to be quite key. And if you have a look over here, that'll give me a bit more confirmation that we can potentially then trade back into these new highs and, you know, potentially go and look to make new all-time highs. I think we got to around 264 more or less. So we took previous all-time highs on a couple of exchanges, but we also didn't take it on a couple of exchanges. So I would still say that there is, you know, the possibility of us making new all-time highs, considering that, you know, we have this false high sitting at around 264. So this liquidity build up down here, that's what I'm going to be looking to target. So I'm going to potentially either look to place an entry like this and run a bit of a deeper stop, so a stop around 160, 170, and then look to try trade an extension back into, you know, this 300 zone. That's what I'd be quite keen on Solana. I might play an internal range play if we can break above here and, you know, form some sort of order flow to the upside. I might then look to try scale in with my entry, get a better sort of stop loss, which will give me a bit of a higher risk to reward. But yeah, right now I want to see a break above this area of 190, and then from there I'll look to evaluate how price action trades. So that's my thoughts on Solana. Ethereum is another one I've been quite interested in, and this price action on Ethereum has actually been quite clear in terms of what it wants to do. I did break this down for you guys last year, and I said that this area of resistance here at around 4,000 was going to play a bit of havoc for us, and it really has played quite a lot of havoc. We pretty much traded into this area at around the 16th, 15th of December, so almost a month ago, and we've seen price reject quite heavily out of there. You know, almost 30% down now. So